Investors should never try to predict which way the stock market is going to go after a presidential election. Let's look at it this way. All the experts said that in September, stocks were going to go down because seasonally, September is a bad month. Sure, it's true, the first week did provide some buying opportunities, but September ended up being one of the best Septembers in the history of the stock market. These experts also said October was supposed to be terrible, but everything from stocks to Bitcoin to gold all rallied during the month of October. A notoriously volatile month that actually didn't see any real volatility this year. Now, those same experts tell us we can expect serious volatility around the presidential election. But don't worry, November and December should both be good months, seasonally speaking. These experts have already been wrong 2 times in a row. What are the chances that they could be wrong 3 or 4 times in a row? Turns out, very high. These experts are often wrong. If even the experts are always wrong predicting the next move in the markets, what makes some investors think that they could be right? We have no shot at getting it right. If even the people who've been doing this for decades can't get it right, why do we think we can? So what is an investor to do? Instead of trying to predict which way the market's going to go next, I make a plan for both directions. What am I going to do if stocks go higher? And what am I going to do if stocks go lower? Additionally, in my more than 26 years of investing in the stock market, I've learned that I cannot predict when there's going to be a downdraft. Many investors think that they can get out right before a downdraft and then get in near the bottom. But the problem is getting out at the right time is hard enough. Judging when it's time to get back in is nearly impossible. Is this just a 5 to 10% correction? Is it a 20% bear market? Or are we about to experience an entire crash of 30% or more? In order to get out and get back in, you have to be right twice in an environment where the experts are rarely right once. Instead, what I do is I make a buying plan for every single one of my investments in advance. I ask myself the same questions for each position. When is my next buying target? How much will I buy at that target? Where are the next buying levels after that target gets breached? And when do I want to be all in on this position? Naturally, the answers to these questions vary wildly depending on what kind of investment I'm talking about. For example, a consumer staple stock like PepsiCo will not sell off as much as a more high growth stock like Nvidia. So in PepsiCo's case, my next buy target may just be 10% lower than wherever it was currently trading. However, a 10% move in a high growth AI stock like Nvidia can happen on one day. So it's not really significant enough for me to buy more at just a 10% sell-off. With Nvidia, I might wait for a 20% sell-off or more before I even make my first buy. It's important to remember that back in August, Nvidia sold off more than 30% from its all-time high and then bounced right back up to its all-time high. If you had made a significant buy right when Nvidia sold off only 10%, you may have made a mistake by the time it got down to 30 or 35%, potentially selling the position thinking you could get back in, and then you would have missed the bottom and the opportunity. The quantity I buy at each level also varies. It depends on how much I currently own, how much I want to own, and how much I have left to put to work in that position. After I've made all my buying plans, I go in and enter limit orders in advance into my brokerage account. By doing this, I avoid the temptation of wanting to cancel my orders or change them in the middle of a market sell-off. I never want to make a decision when emotions are running hot, and they are always running hot during a systemic sell-off, no matter how even-tempered you can be. For me, I tend to raise my buying targets when we see a sell-off because I'm worried I won't get hit. And then the market ends up selling through the new buy target, my previous buy target, and even lower, which meant that if I had just waited and followed my plan, I would have gotten filled at a better price. By entering my buying orders in advance, I can relax during a systemic sell-off, knowing that my plan is already in place and that I had done all of the work when I was unemotional and objective about what might happen. If my buy orders fill, that's great. And if my buy orders don't fill, that's fine too. I can always go back and reassess my buying plans once the smoke's cleared and the emotions have evened out. Learn more at getirked.substack.com.